Ladies and gentlemen, I am pleased to have back on the podcast Dan Held. He is an 8-year Bitcoin veteran. He's built cryptocurrency products. He has sold cryptocurrency companies. Currently, he is the growth strategist at Kraken exchange. One of my favorite Bitcoiners to follow. Dan Held, how are you doing today?
Doing well. Thanks for having me, guys. And to the moon, all-time highs today. I think we're all riding pretty high on that on that moon juice.
Dude, it's crazy. This is the perfect episode to have you on because Bitcoin is now officially blasted past 20,000. Last I checked, it was 21,000. It's just an amazing time to be in the space.
Totally. I mean, I've waited 8 years to see this moment. My original investment thesis, and I encourage everyone whenever they invest in any sort of asset to come up with a thesis or a reason why you're investing in a certain asset, whether that be real estate, Bitcoin, or whatever you'd like. When I entered my position in 2012, my hypothesis was that Bitcoin is gold 2.0, and it's largely achieved that path. And now we're seeing institutions talk about it, which to me, that kind of represents like, we're not there yet, but we're really, really on the path. Like we were a bunch of weirdos in a basement in San Francisco talking about how we thought Bitcoin was gold 2.0. And now the whole world is coming around to our vision of that. And it's just wild to see. The last 2 months have been crazy in terms of the number of pedigreed folks going, yep, Bitcoin's gold 2.0. And we've allocated $1 billion into it, or $500 million. And you're like, this is what success looks like for Bitcoin.
I know, it's crazy. It's like the stuff that you've been writing about for years and that we've been talking about for 2 or 3 years, why Bitcoin is valuable. It's like crazy to hear the Paul Tudor Joneses and all these, notable investors basically regurgitating the same arguments because it seems like they understand it too. So, yeah.
Speaking of this last year, just general big picture before we get into some specifics, what sort of surprised you most about cryptocurrency in general in 2020, and how will that inform your decisions into this next year?
That's a good question. I think what surprised me, probably how fast Gold 2.0 narrative took off with institutions. As soon as it was de-risked from a career risk perspective, because it's a chicken and egg problem where if no legitimate institutional investor buys it, then if you recommend it at your fund, you look like a crazy person or lunatic, and you might get cut or you may not get a bonus that year. But as soon as people legitimize it, now they've reduced that career risk. And I think I underestimated how quickly that loop goes into effect. For me, I thought it would be like a multi-year sort of thing. But what we're seeing is it's a multi-month process where as it gets de-risked and then the price goes up, people become more aware of it. And then hedge funds are like, well, why wouldn't I want to? I mean, a normal hedge fund return that's good is like 5 to 7%. That's like phenomenal hedge fund returns. And we just got that in 12 hours in Bitcoin, right? So for these guys, if they can manage people's money and they take their 2 and 20, which is a 2% management fee and 20% of the upside, why wouldn't you want to speculate on Bitcoin, especially when the career risk has gone down? It's increasingly legitimized. So if the trade goes bust, you're like, well, look, Paul Tudor Jones did it in Guggenheim, and JP Morgan and Citi analysts said that it was going to go up, to where it's kind of like investing in Bitcoin for these funds is kind of like the 2008 financial crisis a little bit, where everyone invested in these mortgage-backed securities. And you're not wrong in Wall Street. You're not wrong if everyone's wrong. So it's kind of the opposite version of the career risk, where the career risk has been so minimized that everyone piles into the same trade, because if everyone does the same trade, then no one was wrong. So with Bitcoin, we could very much see it become that. And that's where the price could have a huge amount of appreciation as people call up their, LPs or the limited partners in these funds call up the fund managers and like, why aren't we in Bitcoin? Your competitor rival hedge fund just had a 40% return this year. So it's sort of this beautiful, just very basic game theory of whoever gets in last will have a poorer return. And this is a good thing. It's not a Ponzi scheme mechanic. It's a good thing because for any new money to be incepted or adopted, more and more folks have to believe in it. And the speculative nature of Bitcoin just feeds into a basic human dynamic, which speculation is a core part of any asset and how it's priced. But with this, it actually increases the adoption of Bitcoin through price appreciation. The signal is the price. The price goes up, people become aware of it. They buy in anticipation of it going higher. Then more people become aware of it. More products and services are built around it. People go down the Bitcoin rabbit hole like you guys did. I think you guys came in the 2017 bubble, right?
Exactly.
We came in, yeah, I've heard about it in 2013. Goddamn wish I would have gotten
Didn't
involved.
do anything with it then. Then in 2016 kind of was like watching it, and then 2017 really got into it.
Yeah, it takes time, right? It takes time to really get into it. And I'm not going to pretend that I perfectly understood it when I first heard about it. It took me a long time to figure it out. And so, now we've got huge liquidity. We've got great education. I mean, the educational content, which you guys put out, the podcast out there, the long form articles and tweets and everything, even the TikTokers, everyone's part of the Bitcoin marketing team to talk about Bitcoin, to propagate the narrative of why it's valuable. And it's just so much better than it was before. I mean, before it was like Andreas Antonopoulos, and he's great, but he was like the only guy who was a good speaker that you would like, if you had to nominate one Bitcoiner to go talk to someone about Bitcoin, to be like, oh, well, let's tap in Andreas. And over time, there's a huge roster now. We got a big team that can go in and explain Bitcoin simply to someone new who might be really influential.
Totally. And I know what you mean when I think Bitcoin, or I think gold 2.0 is such a clear narrative for Bitcoin this time. Because when I was coming in 2016, 2017, Bitcoin is a better money, but I don't really understand what that meant. Obviously, I'm comparing it to Venmo. It was confusing, but gold 2.0, I think, is such a clear narrative that everybody can get behind, especially seeing, the dollar get devalued. So,
and I call that narrative compression. Like, it's the compression of like a lengthy narrative, like, oh, Bitcoin has gold-like properties, and you could wax on poetically about why it's a gold 2.0, or you just compress it all into like, it's gold 2.0. You don't know exactly what that means if you heard it for the first time, but you understand why it's valuable. And so, yeah, I totally agree. We have narrative market fit with the market cycle, which is huge. With 2017, there were still like the B cashers on the Bitcoin Cash side who very much, I think that narrative, and you guys are storytellers because you guys, live out in LA and that's part of your profession, is to tell stories. And I feel like that's what I like to do with Bitcoin. And I weave stories about Bitcoin's origin and whatnot. When we look at the narrative of like the P2P cash narrative, like the payments narrative, some folks go, oh, well, what's the harm in having two narratives? And I was like, well, we had a civil war because of it. It literally a civil war of brother against brother. I mean, Roger bought my first company. So like, I know Roger really well. And we literally had a civil war, and then it was damaging to the store value narrative. It's like, if you try out a product and it's totally different than what you expected, you're probably not going to go try it again. So the folks championing the payments narrative, people come in and they have a really awkward experience buying coffee. And they're like, well, that was dumb. Why would I want to use Bitcoin for that? Then they miss out on the bigger narrative and the more narrative market fit product of that Bitcoin stores value well. It's a gold 2.0. So with this bull run, we don't have any of that confusion. It's great. It's phenomenal. It means that like the narrative cohesion with the market is perfect versus in 2017, it was like kind of actually a headwind against Bitcoin's progress because you had the Bitcoin Cash hard fork happen in 17, and that led to a lot of anxiety around which one is the real Bitcoin and everything else. So I think that this market cycle is really, really nicely distinct and clear, which also gives it the opportunity to be even more intense or different than previous cycles.
And that all went into the sort of narrative that Jack Dorsey has mentioned, like Bitcoin has passed the test. It's multiple tests in terms of now we're not guessing, what's the real Bitcoin. It's obvious now that, other altcoins we're trying to mimic couldn't stand the test of time in terms of the security. But my question to you, these next few years definitely seem to be the years that publicly traded companies are announcing, hey, 1 to 5% of my treasury reserves into Bitcoin. How long do you think it'll be till central banks around the world start adding Bitcoin to their balance sheets?
That's a phenomenal question, and something I daydream about, because that you start to be really, that if there were a couple KPIs to determine if Bitcoin has hit gold 2.0 status, that would be one of them. right? Because central banks have historically used gold to back their local fiat currency. So that would be a KPI of like Bitcoin's made it. It doesn't mean Bitcoin's done appreciating in value or that it's won, it's that it's made it to like the final battle, and it's like a legitimate contender. And so for me, yeah, like the central banks buying Bitcoin, I didn't anticipate the institutional money flowing in this rapidly. I think Bitcoin needs to get much larger though for the sovereign wealth funds and central banks to start to get in. I mean, they have trillions of dollars in assets, and they need to deploy money at scale. So they can't go buy just $1 billion of Bitcoin. They needed to buy like 10 billion. And that's actually a lot. That right now, Bitcoin's market cap isn't high enough to support liquidity at that sort of scale without really moving the price. But Bitcoin at $1 trillion market cap or 5 trillion, now you're looking at Bitcoin really being able to allow the largest market participants, the sovereign wealth funds, the central banks to start buying it. So I think it's when we reach $1 trillion plus is when we start to see central banks buy Bitcoin for the first time and announce it.
Cool.
Interesting.
And what was the price of Bitcoin when you bought your first Satoshi?
Around $10. I don't know the exact. It was between $8 and $12 for a little while. And look, I wasn't a perfect Bitcoiner day one. I think everyone follows the same journey of you day trade a little bit and you do it badly. I definitely lost money.
You think you can beat the system?
Yeah, and you panic sell, you FOMO buy, panic sell, day trade a little bit of Litecoin, back in 13, and then you buy stuff with Bitcoin back then because it was like, oh, let's go try it out, and then every single time I've done that, I've totally regretted it. I've purchased the most expensive hamburgers in the world in Berlin at Room 77 when they were still around. So yeah, I think a lot of human experience is learning through pain. Pain isn't necessarily a bad thing. It's a teacher of what not to do. That's where it's, I think the avoidance of risk and pain in the mainstream world is actually a big flaw that we have in humanity right now, where it's the worry that like, oh, any sort of pain is a bad thing, we should avoid it. It's like, well, if pain is a thing that can introduce us to better behavior or more optimal behavior, then that's not a bad thing. Like if I lose money because I'm day trading, great. Well, then if I lose just $1,000, then maybe I won't lose $1 million when I do it at scale or something, right? So I think it's a very good teacher. And so I think I've had a lot of pain with my crypto experience or my Bitcoin experience.
Dan, is this your son that we're seeing right now?
This is me back in 2013. I don't know what was going on with my hair, man. I thought that it was cool looking or something. But I was part of the early Bitcoin meetup scene in San Francisco back in 13 when there was only like a dozen of us. And Kashmir Hill, a reporter for Forbes at the time, she went to the sushi place, and that's Kashmir. And
Bitcoin certainly have enough momentum behind them to really have that market impact of being the next accepted currency.
So right now I'm waiting to pay the bill at the sushi restaurant. The currency is not that stable. So can your app tell me what the current rate of exchange is with the US dollar and how much I'm going to end up paying here?
Yes, it can. The current price of Bitcoin as of 1 second ago is 107.64.
So it's falling.
And we've stayed in touch since then, actually. We've done a documentary together on cryopreservation, which is kind of a side note. I don't think we want to go down that rabbit hole. Yeah, you guys got to pull it up.
Dan, why are you thinking about signing up for this cryonics plan?
I'm not really afraid of dying. I'm going to live my life as I always do, but there's no reason it has to end if there's medical technology that could advance it or preserve it for someday in the future.
So what does signing up mean to you?
I really love the life that I have, the friends that I have, the family that I have, and for me, signing up represents an investment in the future, an optimistic outlook on life.
Yeah, so I'm getting cryopreserved when I die, and Kashmir Hill, her and I did a documentary together. So we became very close over the years, and she's also a really cool reporter where she reports on privacy. She like uncovers NSA stuff to where, she's kind of like a nitty gritty reporter. Like not your typical reporter, she's an investigative reporter, and she covers like data privacy issues and stuff like that. So she got a bunch of Bitcoin donated to her from the Bitcoin subreddit. which she then used to buy a dinner for everyone in SF who showed up to the sushi dinner. I go to the dinner. I'm like, oh, this is super cool. This is a lot of fun. I had just built an app called Zero Block, which ended up being the most popular mobile app in crypto in 2013. And so I had this app, and they needed to figure out the price of Bitcoin. And we had the only real-time market data app. I told you the real-time price of Bitcoin. It was a bizarre problem. Back in 13, no developers had built a real-time market data product. So that's what we built. And so in the video clip there, they show me with my phone, and we look at the price. And it was actually in beta. We hadn't launched it yet. And I coincidentally got connected with her there because there was like 50 people in this little sushi spot. The only 2 seats left in the sushi place were at the reporter's table with her and Ryan Mack, who was also at Forbes at the time.
Perfect. That's what you want.
I was thrilled. This was my first product I'd ever built, and I didn't really know much about how to get the name out there and awareness of the product. And so I was like, this is a really lucky roll of the dice.
At what time, Dan, are they instructed to bring you back if you're being cryogenically frozen?
Yeah, so that's a really interesting question. You can set up a cryo trust, which have different conditions. For example, you could say when cryopreservation resurrection techniques have like a 90% success rate or something. Let's put it this way: you're already cryopreserved, and your body's nothing's gonna happen to it. So there's no harm in waiting.
It's true.
You don't want them to bring you back in 50 years when it'll be better in 100 years.
Well, if they bring you back in 50 and there's only a 50% chance they bring you back, or you're permanently dead then, or you wait another 50 years and it's 100 years away, but you have like a 99% chance that they can bring you back. And the basic premise is that you guys have all heard of like different animals that hibernate, and there's different types of animals that can actually go into like frozen states and survive in that very frozen state. In fact, a very primitive forms of like a human, a sperm and eggs, can be frozen. And they use the exact same technique with liquid nitrogen. At scale, there's a lot of issues that occur. And so that's the basic premise, is that you're scaling that up, and the process hasn't been perfected yet to bring back organs and whole bodies. And the idea as well, if you believe in like a soul or the idea of a consciousness, is that our consciousness must reside in our brain matter. And if you're a religious individual, you would state that like, okay, well, when my heart stops, we typically acknowledge that that is not death. It's typically like when there ceases to be brain activity for an extended period of time, that is irrecoverable. So normally, like, people have drowned before and have no brain activity, but they've slowly been warmed up and brought back with no brain damage. So we would state that that individual is likely not dead, because their brain material and their consciousness had been preserved. It's only in the moment when that gets destroyed to such a degree that we can't bring them back, there's so much degradation to it, that then we would classify them as dead. I've signed up to the same facility that Hal Finney is cryopreserved in Arizona. Outside of Bitcoin, cryopreservation and life extension is probably my second favorite topic. I don't get to talk about it too much in crypto because I'm already weird enough with my Bitcoin talk. Luckily my girlfriend and parents tolerate me, but definitely some weird conversations at the Thanksgiving dinner table.
Is your girlfriend doing it?
She said, if we get really, we're very much in love, doing well, if things progress and things work out, then, if we're like committed to each other, like in a fiance or engagement or something like that, then I think she would do it.
That's awesome. Imagine you, her, Hal Finney, and Walt Disney all having a conversation in 200 years.
Well, she also has a similar portion of her net worth into Bitcoin as I do. And she did that before she met me.
What?
So,
she's perfect for you.
Yeah, I found a Bitcoin girl, the rogue Bitcoin girl. And she didn't require any convincing by me. She had already done it by her own accord.
That's awesome. I'm still stuck with Tron girls. I got to find a Bitcoin girl.
I don't know. I mean, if they have like a nice pump or whatever, then you might have a lot of, might like to go party.
Exactly.
Yeah, there was a
one
lot
and
of,
done.
There was a lot of Ethereum girls in San Francisco during 2017. There's a big overlap with the burner community because, the unicorns, rainbows, kind of that sort of vibe. So it's actually funny. There was quite a few Ethereum girls in San Francisco from 17 through probably 18. And then when the price dipped, they didn't really care about it. So most of them left.
Cool. Well, let's get back to Bitcoin because I did have a couple of key Bitcoin questions I wanted to ask you. I guess, first of all, I think with Bitcoin breaking all-time highs, I think most people still have bear market mentalities. They're still thinking about this market as we've seen it in the past 2 to 3 years. But you've been in this space a long time. How does the next year or two differ in a bull market?
Yeah, that's a great question. So there's two ways to think about it. We've got the macro backdrop. So the macro at the very high level, like what does the world economy look like? It's pretty bad. COVID is not a good thing for the economy. Tons of businesses got shut down. Governments engaged in massive money printing operations. There's a lot of lack of faith in the government. So pretty much a perfect storm for Bitcoin, because Bitcoin was built and planted during the 2008 financial crisis to solve the problem of trust and storing value with governments. It removed that from them and gave it to people, and you could trust in mathematics and game theory instead of having to trust your politician and their body movements and interpreting that into monetary policy, which is what we do today. We watch an animal, watch a human being do a random fucking dance on TV, and then we interpret that as like, oh, they're dovish or dovish or hawkish on the economy, and that economy is planned for 400 million people, which is absurd. I mean, when we look back on this, it'll be hilarious to look at like what we thought was an effective like monitoring and measurement and proper control over the economy. So at a macro level, we've never been in a worse spot in human history in terms of a macroeconomic environment. Never before. And even during world wars, I would say it's an equivalent sort of experience. So, when we look at that and then we combine that with Bitcoin's purpose and where Bitcoin is, Bitcoin just came off of a halving cycle. It is being recognized as a global store of value, a gold 2.0. It's being recognized by institutions. It's becoming more liquid. More services are being built. So a super robust trading infrastructure. You got like Kraken and all the other exchanges out there. You've got options now, options and futures markets that are very developed. That didn't really exist in 17 at all. And then you also have like good custody solutions, and you have good reconciliation solutions. Everything's been built out and ready to go for a massive amount of money to come in. Also you've got like PayPal's where you can buy Bitcoin on PayPal. Before, like a lot of people just like convenient services. So that taps into a huge amount of demand for Bitcoin. You've got the Bitcoin halving event where the issuance of newly minted Bitcoin dropped in half, combined with increased demand from institutions and retail traders, plus the macro backdrop of the world economy. You've got the potential for a Bitcoin super cycle where, Bitcoin only went in these 20 to 40x cycles on purely retail speculative demand. But now there's actually demand to preserve value against government seizing that value from you, or against other citizens voting for the government to seize that value from it. So Bitcoin's value prop, it's really hard to talk about. Bitcoin's kind of like insurance in a way. When there's no earthquake, like we're both in California, you don't really think about earthquake insurance. You're like, yeah, it's going to happen, but do I really need it? But then an earthquake hits, and I bet you anything, the insurance company gets 1 billion phone calls calling in to get earthquake insurance. Same thing with Bitcoin. It's really hard to be like, hey, do you not trust your government in 2015? And people are like, everything's fine. The economy's great. Why should I have to worry about that? But now they're like, oh, okay, yeah, this makes a lot of sense. So what happens to Bitcoin's price in that? I don't think we're going to see what happened before these previous cycles. History rhymes, it doesn't repeat itself. And so maybe we have like a big bull run and almost no dip. Or maybe it's a super big bull run and then we have a traditional dip too. I don't know. I just know that it will be different. Or maybe it's slower than we anticipate. Like maybe this moves really fast now and then it slows down. Or maybe we just have a fucking crazy run up to like 100K by March. And, who knows? And people forget too that in 2013, we actually had 2 bubbles. There's the March 2013 bubble and the December one. So you could have something like that as well, like a little one and then a huge one later down the road. So yeah, there's I'm super bullish. I've waited 8 years to see this moment. I can't predict where the price is going to go short term, but look, I've invested most of my net worth in it. So we'll see what happens.
A Bitcoin super cycle. I mean, what are we talking, Dan? $100,000 top?
A super cycle, you would move from like 10K to a million or something like that, where, I can't predict what happens when Bitcoin goes past a couple trillion market cap and all of a sudden sovereign wealth funds are like, we want to put 100 billion in Bitcoin. This could be the moment where like these previous cycles increased the awareness of Bitcoin and it slowly gained adoption. But what if it's more of an S curve on a log chart where like everyone goes, oh shit, we really need Bitcoin right now. And Bitcoin moves from a 0.1% of the world population to 10%, which would be huge. It's 100x the amount of ownership. And they all just pile into Bitcoin. I don't think the price does a normal cycle of just like 10xing or 20xing. It does like an insane movement into like $1 million a coin or something. Who knows where it goes? It could be between, I think anything between 100,000 and $1 million is possible. There's a lot of different math that shows that it could be between like $250,000 and $500,000 is the predicted top for the cycle. Who knows? Who knows where it goes? I just know that it's very underpriced when we look at the world, when we look at what Bitcoin offers. And just look at like Apple. Like Bitcoin is worth 1/4 of Apple. Is Bitcoin worth more than that? Yeah, totally. So yeah, I think we have a huge, I don't know where the price ends up, but it's certainly going to be an exciting 2021.
That's what I wanted to hear. Before we go any further, I did want to encourage our audience. I always like to follow thoughtful people in the space. And I was following you before you ever came on our show. I think Dan is a great person to follow in the space. So his link to his channel is down below. What kind of content you put out on this channel, Dan?
Yeah, well, thanks for highlighting my channel, guys. So I put out a weekly newsletter on Thursdays, which covers Bitcoin content. So I cover different aspects of Bitcoin, Bitcoin's monetary policy, privacy in Bitcoin, can governments kill Bitcoin, central banks versus Bitcoin. And so I cover that on Thursdays in a newsletter. And then on Saturdays, I publish my video. And that's where it's myself. I go through what I wrote and I add a lot more color. So I'll add details around, like I'll have articles, videos where I splice those in. And so if you want to go down the Bitcoin rabbit hole and you want someone to explain it to you simply, come to my YouTube page. And that's where I explain this to you in a visual fashion.
Totally. And you touched on this. I just watched you on What Bitcoin Did with Erik Voorhees. Great podcast, great episode. One of the questions Peter McCormick asked you, I'm going to rephrase because I liked it. Dan, you're an early Bitcoiner. You have a great job. What propels you to spend your time writing about Bitcoin and making Bitcoin content?
A really good question. Why do I care about this space and what draws me to it? I think this is the best. I'm a libertarian. So I was a libertarian very early, like when I was 18, 19 years old, I started to read into what we have the rules and laws that exist. And then we have like natural laws that are what we're born with. And we're all born free. We were automatically indoctrinated into our local country without our permission. And then we all just assumed that's how the world works. But in a future state, that's not how things will work. We are all born free. And when we look at Bitcoin and we look at the progression of our freedoms, we've seen those freedoms continually get eroded. How to think, what to do with your body, what to do with your money. We've seen most of those eroded over time. I mean, the FDA dictates what you can eat, and the FCC dictates what you can hear over or what is transmitted. And then you have another alphabet soup agency that determines what tires I can put on my car, and then what FAA for plane travel. And you go down the list and you're like, wow, my whole life is controlled and I don't even really have much to say about it. And then you get to money. Money is the most important element of our society. It enables us to store value, which value is our time and energy that we spend to earn that money, store it into a medium, and then hold it there until we want to use it. And the preservation of that value is a human rights issue. The idea that I can preserve value and no one else can take that away from me is a core function of being a free human. And that's what Bitcoin truly enables, is freedom. It's freedom from tyranny of governments over their citizens, where Right now, they can just call up your bank and freeze your bank account. No one should have that power over you. You should be able to move your money freely, just like how you should be able to move your body freely and do what you'd like with it. And I think that once people buy into Bitcoin, and that totally changes the dynamic of the relationship between citizens and their government. And then that opens up the door to many more freedoms, maybe ending the drug wars, maybe ending warfare, like the Iraq and Afghan war that have gone on for a long, like super long time, where there's actually been soldiers in the U.S. military where 2 generations have fought in the same war, which has never occurred before. It's the longest running war in U.S. history. And so I think
and the media is spinning that like it's a good thing, like father and son both serving in the same pointless war.
Bizarre. Yeah, bizarre. In a country we don't really care about or understand very well. And so, yeah, I think Bitcoin, you can rely on humans if they're willing to give up a lot of their freedoms, like with the TSA, yeah, I'll take off my shoes. NSA, yeah, they spy on me. But the last thing they care about is their money, because their money, they worked really fucking hard for it. They want to keep it. And as soon as they buy into that premise of like, this is my money, I should keep it, and start to challenge the state, it then unravels the argument for everything else. It's like your mind for a moment, has taken the orange pill, and now you've woken up to the matrix. And so my hope for that is that this unlocks an era of libertarian freedom to where we can truly be free like we were born free, where we don't have drug wars anymore. We don't have all these silly notions of like what we're allowed to do that are basically violations of our, core underlying principles of like, yeah, I can do whatever I want with my body and I can do whatever I want with my money. That's the whole point. So that's my hope. My hope is that Bitcoin is the inception point for freedom, and that changes the relationship of governments and their citizens, and then also changes the citizens' minds to start to question the nature of the reality.
And something that I liked that you touched on in Peter's show was that you said you were, in the Bitcoin, you were around Bitcoin in the early years, then you went to work for Uber, and you were still in it, but you were mainly focused on Uber. Then you came back and you saw all this misinformation out there, and you just felt compelled to start writing and start trying to explain, everything that people are getting wrong and fudding Bitcoin.
Yeah. I mean, for me, it drove me nuts because I don't know. I mean, I'm a very much a debater type of guy. I like to debate. I get in Twitter battles, and the interview you're referencing is the one I had with Erik Voorhees. Him and I have a great amount of respect for each other, though, when it comes to interviewing. So I think it was a really, really nice, chill interview, debate. Yeah, I started to write about these narratives because, for example, proof of work is wasteful or like bad for the environment was a predominant narrative in 2017. And I was like, this is ridiculous. So I set out to go debunk the narrative. And so I thought about comprehensively how to attack the narrative from every single angle. And this is a skill I worked at Uber. At Uber, when you presented it in front of Travis Kalanick, which I did a few times, and Dara a couple of times as well, you had to be had to have an extremely tight narrative. If they found a thread, they were going to pull on it. And so you got to be really locked down. And actually, Jesse's the same way. He's a really brilliant CEO. He definitely wants to see that you've thought through every single angle. Have you thought through it this way, this way, this way? He's going to approach it from every single side. And so when I wrote my content, that's how I did it, to where after you read this, you're like, I'm convinced. There is no loose thread to pull on. And then I thought about it from like a defensive mechanism for Bitcoiners. This is the article you hand to your buddy when he goes, oh, isn't proof of work wasteful? You copy paste the link. I've done the hard work. You just use me as like a method to like convince them otherwise. So I did this with a number of topics. The hodlers are the revolutionaries. That was my first article. And I wrote it because Naval Ravikant actually said that hodlers are free riders. He later retracted that, and 2 weeks ago, he actually tweeted like hodlers are the only thing that makes it all work. So he's definitely changed his mind, but that triggered me so much to where I realized I was like, Silicon Valley fundamentally doesn't understand Bitcoin, and I need to set the record straight. And I had never written an article before. I had done like maybe 2 or 3 podcasts ever in my life, and I didn't really know social media that well. I think I had a couple thousand followers on Twitter, but that was like remnants of just my time being in Bitcoin. And so I just really cared about setting the record straight that I felt were objectively wrong principles. Proof of work is not wasteful. Hodlers are the revolutionaries. Bitcoin's origin story, a lot of people back in the day would say, oh, Satoshi just shit out Bitcoin in 2008. And I'm like, what? How could you just like ignore the timing of that and just pretend that it was random? I mean, it's such a disingenuous narrative, right? Same with like Bitcoin's objective, like peer-to-peer cash versus store of value. You've got guys who like to highlight the white paper title over and over. And then I'm like, cool, have you ever explored the word cash and what the cypherpunks meant and what Satoshi meant? And they don't. They misinterpret it intentionally. So I felt like I had to set the record straight. And that's why I started to write. I started writing, then I started tweeting more, and then I started to do more podcast appearances. And that all kind of led to where we are today. And for me, I just want to look back and Bitcoin's looking like it's got a good chance of winning. And if it does, it's be pretty fucking cool to look back and be like, yeah, I don't know how much I helped, but I helped a little bit. And yeah, it's something to be proud of, and maybe when I'm older, all the stress from hodling and talking about Bitcoin and defending it, hopefully when I'm, 20 years from now, when I'm in my 50s, if we've succeeded, I can finally, just chill on a beach with a margarita and just be happy that we made it.
That's awesome. That's awesome.
Love
so
that.
I do encourage everybody, don't do it to be nice to me, only if you're actually going to watch. Subscribe to Dan's YouTube channel, and let's move on to some other cool questions.
Dan, I would love to know, was your mind changed at all by the Voorhees debates you had on what Bitcoin did? He was more Bitcoin and altcoins can coexist, and you were more Bitcoin is the fundamental use for a blockchain.
Yeah, I don't think my mind has changed. I respect the arguments that he made. I think for me, I'm a very big product person, and that's where I hoped to connect with him on that level in our debate, because I really respect a lot of the products that he's built. Satoshi Dice, Shapeshift. He's got a great tolerance for risk, and he's got good UX. Like Shapeshift was great. It's like, here's an address, send money there, and then we'll send money back to another address you like. So got a lot of respect from him from a product level. And that's where I tried to connect with Erik on that in our debate, which was, hey, Erik, what KPIs are we looking at for success? Like there's protocol market fit and product market fit. Product market fit is that an Uber solves a problem that I have where I want to get from point A to point B. And that's called the product solves a market fit. The product solves a problem for the market. Protocols do the same thing. Protocols solve a problem for the market. And with Bitcoin and blockchain technology was built to build Bitcoin. Like blockchains are really shitty at a lot of things. They're really slow. You got a copy of the ledger everywhere. You've got some sort of mechanism to ensure that the ordering of transactions is done properly, proof of stake, proof of work. You've got an issuance curve of like newly minted coins over time. Then you also have like the game theory incentive model, which is like how the block reward incentivizes miners to behave properly. And like that's comprised of transaction fees and the subsidy, which is the newly minted coin. So how do you possibly construct that? It's really intricate. And so for me, I think like it reduces the surface area for innovation dramatically, which look, I'm getting cryopreserved when I die. I fly drones for fun and I've had 5 drones that are like really nice premium drones and I'm a pretty good pilot. And I'm pretty open with everything. VR, AR, tried that when it first came out in SF. I'm pretty open-minded when it comes to tech. I think with money, that's where things change a little bit. And in tech mindset, because I've been in big corporate tech and a bunch of different crypto startups, and Kraken's not a small company. We're at 1,000 people. If you're not shipping code, if you're not innovating, you'll fall behind. And then they try to apply that mindset to Bitcoin where they're like, well, Bitcoin's so static and it doesn't change. It seems like it's going to be an old technology because everything I've seen before with AOL and MySpace, if you're not changing constantly, even Snapchat, like Instagram stories cannibalize a little bit of Snapchat's growth. And so that's the Silicon Valley mindset. And I just don't think that applies for money. A financial infrastructure, you want to be stable and secure and not changing very often because everything built on top of it relies on that being a concrete foundation. I think Erik is more into like, let's experiment and break things. That is a good Silicon Valley mindset to have for something other than money. For money, I think it's extremely risky. I think people are free to do whatever they'd like with that risk. But I think like what's disappointed me the most about the space is I've seen 10,000 cryptocurrencies come and go. And I just really haven't seen a lot of like learning come from it. Because that's typically how Silicon Valley positions failure. Failure in Silicon Valley is embraced and people wear it as a badge of honor because you're like, I learned from it. But with a lot of these projects, we don't really learn much. It was another pump and dump. So I just don't think there's a ton of learning to be had. And then when we look at, they all set out and supposedly set out to solve different problems. The hypothesis was Ethereum could take the blockchain technology and apply it to a different problem to solve for the market, different protocol market fit. Well, now they're pivoting to sound money, which is kind of bizarre. Like if it was a really good world computer and dApp platform, they basically like abandoned those narratives and gone to, oh, well, Ethereum's a better sound money, which is kind of crazy. You know, they never pitched it like that back in 15 and 16. And I was there. I mean, I know a lot of the guys in the team personally, Anthony DiOrio, Steve Dack. Steve, I actually good friends with. And yeah, it was just kind of bizarre to see them change the narrative and no one bat an eye. I think because in Silicon Valley, like pivots are fine to do, but not when like the protocol has all these developers relying on it. So I wasn't really convinced with the whole innovation argument. I think like seeing responsible innovation would be great. I think there's just a complete lack of responsibility in the space just because like you can pump and dump something and no one gives a shit. So you're like, sure. There's like the developers of some of these protocols may not care as much. Also, price is totally decoupled from raw utility. For money, the price is the utility. Like as the value goes up, more people buy into it, more people are in it. There's a higher network effect. But if it's anything other than money and the price is decoupled from the utility, then you're just allowing people to speculate on something that doesn't have product market fit. And yeah, I mean, look, at Kraken, we're very libertarian. We let you buy whatever you like. On a personal level, because this is coming from my personal opinion, I just don't find anything other than Bitcoin very compelling.
I want to get back to Bitcoin, but I did have one specific question on just Ethereum, because that seems to be differentiating itself. At least, I don't know, for whatever reason, I'm not saying it's good or bad. I'm just saying for some reason, people talk about it as the crown jewel of the altcoin space. I wrote this down because I want to put the context to it. Help us understand Ethereum, because when I listen to Bitcoin-only podcasts, they say Ethereum is unimportant, insignificant, a bad idea. When I listen to cryptocurrency podcasts or just people in the crypto industry, they tout Ethereum as the crown jewel of the space. It's revolutionary. It's significant. Is there a middle ground? Help us understand it.
Yeah. So Dan Held pitches you Ethereum is the framing. So Vitalik, who's a very, very smart guy, hypothesized that you could take Bitcoin and change it. You could create a new type of cryptocurrency and change it to where it could be more of a platform for decentralized apps. That was the original narrative. The idea being that you could run apps that were permissionless. So I could make an application that would let me do X, Y, or Z, and there'd be no server that it's running on. There'd be no permissions that I would have to get. A truly decentralized world. And this is what Silicon Valley always wanted. This was the Hail Mary. This was the holy grail of narratives. Every boomer VC obsesses about this. It's insane. Literally, every single one is obsessed. I mean, PayPal's original purpose was to be a decentralized money. I don't know if you guys knew that. So like he captured their imagination perfectly. Now, when it comes to, so that was the original concept that has morphed over time to where these dApps have become more of DeFi application or decentralized finance, which as of 2 years ago, the word DeFi didn't exist. But DeFi is kind of the morphed version of dApps, but for utilization in different financial instruments. So you can borrow against your ETH as collateral. You can lend your ETH. You can wrap it up into something else. You can have other ERC20 token assets wrapped up into Ethereum. So the idea being that like there's DeFi is essentially decentralized finance where you could rebuild the financial infrastructure in this permissionless way. Both are very captivating ideas. Both are very, of course we all want these sort of things to exist at a fundamental level. Like who doesn't want a perfectly, like where all the incentives are aligned and there's a bunch of middlemen removed from the process. Like everyone wants that, right? But then we look how it's practically done. How does the actual implementation work and how has it worked? And we just don't see that being actually executed on. There are some projects that are interesting. I know, like with the recent wave of DeFi products like Uniswap and whatnot, there's a lot of life in that, a lot of belief that this does solve problems in terms of like trading different crypto assets. A lot of them have weird incentive models to where we'll see if that stands up over time. Also, DeFi projects and Bitcoin and every other decentralized sort of system compete with CeFi. So, that's a really interesting dynamic that I don't think many people think about, where they're like, oh, well, it's permissionless. And I'm like, cool, but what if I don't need it to be permissionless? Does it offer me a higher interest rate on lending out my crypto collateral? So Ethereum originally pitched as this really cool idea. In actuality, Ethereum's blockchain, even with proof of stake and sharding, will not be able to scale even close to what it would need to be able to do to enable this world that it proposes. Also, you have a lot of game theoretic structural problems where, if there's a bunch of money in ERC20 tokens, or there's a lot of value being moved that is not Ethereum itself, then the miners might look at the incentive to reorganize transactions. And now that incentive has been removed. That incentive has been altered to where the game theory is a little bit different. I know that there's been some different Ethereum proposals to go change that to where it's a little bit more aligned, but you're essentially building like a skyscraper on top of a skyscraper when the first skyscraper hasn't even been built. And we're building financial systems on top of a financial system that is hypothetical and that is also being refitted, because Ethereum's moving from ETH 1.0 to 2.0. It's being refitted as we're building more skyscrapers on top of it. And I just don't think that's a good way to go build a financial system. I think it's certainly interesting, right? Like, I don't think any of us are like, any Bitcoin maximalist is like, oh, that isn't interesting. Of course we find it interesting. We just have seen so many times in crypto where interesting is usually appended to a token and used to pump and dump or just wildly mislead the investor as to what that token can do or what that coin can do. And yeah, so that's, I think, I think that it's hard to cover this topic succinctly, and also I don't do it very often, but those are my thoughts on like how Ethereum is positioned and how people think about it. And part of my criticisms around why I'm not as interested in it.
Sure. Thank you for helping us understand that and giving us your point of view. Let's talk about real DeFi, Dan. Kraken just implemented the Lightning Network. Pretty big deal, right?
Yeah, so this was huge for Kraken. Lightning is a really popular way to move Bitcoin on layer 2. Of course, look, I'm as critical with Bitcoin and its technology as I am with Ethereum. Lightning is very new. It's a little bit more experimental. We want to be cognizant of our customers' pain points, especially around trading and fees when it comes to withdrawal and other fees that we have. And right now, we have to estimate and look at fees on chain, and those transaction fees in Bitcoin will only get higher over time. So we're empathetic towards that. We want to ensure that our customers are able to move coin on and off exchange with lower transaction fees. And so this is ultimately about solving a customer pain point. Kraken itself is agnostic to any cryptocurrency. I'm personally a big fan of Bitcoin. And I think that at Kraken, we also believe, since Bitcoin is our number one most traded asset, that Bitcoin is a first-class citizen. I don't think this is a controversial opinion or even a Bitcoin maximalist one. It's a customer-centric one and I think Coinbase thinks about this as well. Like, Bitcoin is their number one traded asset. So treating it as a first-class citizen, solving customer pain points of moving coin on and off exchange with low fees, that's why we announced this. It's been a long time coming with Pierre Rochard, who's been championing this internally. He's done an awesome job. And I know Jesse deeply cares about the experience of crypto traders. Also, Jesse's he's a cypherpunk, man. He's publicly said, which is funny, he's like, take your money off Kraken and do self-custody. He's like, not because you should worry about Kraken as a risk, but he's like, if I get a call from the government and I have to lock your coins, I have to do it, or if I have to, do something that's compliance related or, anything else, I have to lock it down, so he's very much encouraging at the principles of the Bitcoin ethos of self-custody. He's libertarian. So I think that Lightning follows very much in that vein of, it's a new scaling technology that can enable our traders to move a large amount of money between exchanges are between us and their wallet very quickly and very cheaply. So that's super cool.
And in our final, 6-7 minutes, we took some audience questions too on Twitter. So I'm going to kind of jump around a little bit. I would love your perspective on this. Does the rehypothecation of Bitcoin increase the 21 million limit, or just what impact in general do you see lending of BTC have on the overall market?
Yeah, that's a great question. I think there's a lot of good concerns around, are we just recreating the existing financial system? What's cool about Bitcoin is that inevitably all these coins are on layer one and they're controlled by someone. Someone's got the private key to those coins, and no more than 21 million Bitcoin can ever be created. And that is perfectly auditable by anyone with a computer. You can run a Bitcoin full node and check it yourself. That's huge. That changes everything. Lending and borrowing was always going to exist with Bitcoin. Hal Finney even hypothesized the idea of Bitcoin banks all the way back in like 2010. So we all saw this coming for a long time. The financialization of Bitcoin is not a bad thing because we have not compromised any of the base principles of the Bitcoin core ethos of the Bitcoin community, preserving the 21 million hard cap, preserving immutability to where like there's no censored transactions, et cetera. So I think Bitcoin's principles have never been more solid, and that's what drives value in Bitcoin. Now, there's layers of companies that operate on top of the Bitcoin protocol that introduce risk. So you've got companies like not risk to Bitcoin, but risk that introduce risk and you're compensated for that risk, like BlockFi, Genesis, or Ledin. Those are three companies that I personally use. I only recommend them because I have my own money there. And let's put it this way, like I do have affiliate fee revenue, but the revenue is a whole lot less than the amount of money I have there. So if anything happens, I lose money alongside with everyone else. I have no special arrangements. That was the only ethical way that I could feel responsible in recommending these. I could feel ethically responsible in recommending these services. But these are services that let you like lend your Bitcoin out. I don't think that doesn't create any more Bitcoin in the base layer. That does take existing Bitcoin and then lends them out to folks and creates a borrow rate for Bitcoin. So how much are people willing to pay to borrow your coin for a certain period of time? I think at first Bitcoiners are very skeptical of anything financialization related. We're against the big banks, right? Like this is a traditional banking sort of activity, and it's also risk. Holding Bitcoin is a risk-free rate. It's a great way to reduce risk. Just hold Bitcoin. You don't have to trust anyone else. When you lend it, you're taking on incremental risk. The reason why I do it is I never want to sell a Bitcoin if I don't have to. It'd be awesome to like never sell. If I manage my risk properly, I could just live off the interest on X amount of coin. Again, you'd never want to risk like your whole stack. You'd never want to risk an amount that would, to where you'd feel very depressed. Only risk what you're willing to lose. But if you did it properly, and I explored these different systems and platforms over time, most of the trades are going to two trades. They're borrowing Bitcoin, and they're using it to trade the cash and carry trade on Bitcoin futures, where Bitcoin futures trades higher than spot, and you can capture the premium there. And then there's that, plus there's also the GBTC premium, where the shares of GBTC, which are a trust that holds Bitcoin, that's available to trade at different traditional brokerages. So you can buy it with your Robinhood. I think you can buy it with Robinhood, but you can buy it with like Fidelity. You can buy it with Interactive Brokers. And there's a premium that people pay to get access to GBTC because it's easier. Also, you can like tax advantaged accounts like IRAs can buy it. And institutional investors buy Bitcoin, or they borrow Bitcoin, send in the Bitcoin to purchase shares of the underlying and GBTC, and then capture that premium. So that's where a lot of the borrow in the space is coming from. And both, I think, have pretty minimal risks. There are certainly really hard to quantify counterparty risk at a macro level, like for futures trading, if one of those futures venues got hacked or something else, over time, Bitcoin's financial infrastructure has grown more and more robust when it comes to these centralized custodians and trading platforms. There's also the ability to lend to margin pools. So on Bitfinex, you can lend to Bitfinex's margin pool, which is great because you know your counterparty. And traders who want to borrow against their crypto on exchange, they borrow from you. And it's all controlled within their system, which is great. So there's different types of risk, different tranches of risk reward. Ultimately, I think financialization isn't a bad thing. I don't think it does not increase the number of Bitcoin out there. Ultimately, it all has to settle on the base layer. So if hodlers don't want to lend, then the borrowing coin will be prohibitively expensive. And if there's a liquidity crunch where there's been too many coins lent out, great. Eventually it all settles on layer one and someone's going to lose their shirt, which is going to happen someday. Eventually, I think with Cred, one of these platforms that they already kind of blew up. And it's not the last one too. It's just going to be like the traditional banking system back with the gold standard. You had banks that had poor lending and risk management practices, and over time they failed. So yeah, it's going to happen. It's not a bad thing. It's just something that's going to happen. Don't risk, if you're going to look into these things, don't risk a lot of your coin if you can't stomach it. At the same time, it's pretty cool to like never have to sell your Bitcoin. You could also borrow against your Bitcoin using dollars. So you could borrow dollars using your Bitcoin as collateral. And that's a really cool way to avoid having to sell, which is also why I think this bull run is going to be insane, because previously the only way to capture gains with your Bitcoin was to sell them. But in this one, you can lend it or borrow against it, and that reduces the amount of supply hitting the market. So I think, that's where this bull run could be really intense, where like at the top, like who wants to sell a Bitcoin? You could just borrow against it, So we'll see. But yeah, lending and borrowing introduces not risk to the Bitcoin protocol, but risk to your coins if you choose to use the services. There is value behind using the service. That's why you're compensated to lend your coin out. Or, when you borrow against your Bitcoin as collateral, that certainly has risk too with the custodial risk. But you like the value of it because then you don't have to sell your Bitcoin. So yeah, a lot of trade-offs. Everyone should evaluate these platforms independently. I have a Google sheet where I've put my own allocation. This is my subjective personal opinion. The coins, if I'm wrong, I'm going to lose a lot of money. So it's, look, I was going to do it anyways. And how I felt about it was like, well, what if I just kind of live blogged it and then wrote up my experiences? And now I've gone down the rabbit hole where I'm talking to some of the credit desks and the risk management desks, and I'm really understanding the nuances of like, I'm like, hey, are there preferred payout tiers? Like what happens in the event that there's a socialized loss? And most of them, in fact, every single one I've asked said no. So like, there's no like 2-tier system. I plan on writing a little bit more in-depth articles on this, where it's basically going to be like Dan's forays into this sort of sector. We'll see if it helps at all. Maybe I get blinded by a big default by someone and I never understood my risk properly. But I think it's a fascinating journey into the financialization of Bitcoin. And it's interesting to think about, because this system will exist on Bitcoin no matter what. You can't stop it. It's going to happen. People are going to want to lend and borrow. And what if we can, it's sort of like a whole new financial sector of Bitcoin that didn't exist a couple of years ago. And I find it really fascinating.
Damn, you attacked that audience question from every angle. I see what you mean by working at Uber and for Jesse and everything.
I loved it.
Yeah. I just had one more question before we ended this. I don't know if you had any more, Austin.
I just want to make sure we cover the end of the year, the title of this episode.
Right. Well, okay. Well, my final question is, I asked a similar thing to Pierre Richard. People coming in, this is the first cycle, as you said, where there's so much great information about Bitcoin. There's so many different ways to buy or accumulate Bitcoin. Yet it's interesting because most regular people today will not be able to accumulate one full Bitcoin. Let's just say somebody could accumulate 0.28 Bitcoin. It doesn't seem like a lot today, but do you think that has any significance?
Sure. 0.28 is a great amount to start. I think any amount of Bitcoin is a good amount to start. I'm guessing 0.28 is some sort of percentage of the total or some sort of like population. I forget. There's the 6.15, there's the 0.28, there's the 1, there's the...
They said, I think it had to do with some video or some article said that 0.28 Bitcoin will put you in the top 1% of all Bitcoin holders eventually.
Yeah. I think, maybe it was...
Unchained Capital or something.
Yeah, I've also tweeted a few things like this, but I've tweeted like 4 or 5 variations of it. So I forget. Now, each one is demonstrating the ultimate scarcity of Bitcoin, right? At 0.28, I mean, you're only looking at, that's only like a two, was that like yeah, that's only like 100 million people. But like, 0.25 times, yeah, more like 80 million-ish people. A little bit less than that, actually. So yeah, that's a pretty small number. I think maybe like the number of billionaires in the world is something like that as well. Like I know that there's more more millionaires in the world than there are number of Bitcoin. So, that gives you an idea of the relative scarcity of Bitcoin, where we've got a very finite amount, 21 million, and we have 7.7 billion people. Very few of them have even thought about Bitcoin or even consider it a real thing. And then what happens when they do? It's going to be a huge groundbreaking event. So yeah, there's a bunch of different variations of this meme of introducing scarcity, where I know American Hodl, he loves the 6.15 one. There's some that are really like 21 back in like 14, 15, 16, 21 used to be kind of like the goal. Cause then you could you're one out of a million sort of thing. And I'm sure before that having like 1,000 or something, that came before me, way back in the day. Those guys who mined it, I mean, I bet for them, they think about it in terms of like 4 or 5 figures, but from like coins, I can't, I didn't go buy a giant amount of coins in 2012. Like even at $10, 1,000 Bitcoin was $10,000. And like, I just graduated college, and you'd have to wire money to Mt. Gox. And it used to take like a week to get there. And you didn't even know if it was going to get there. And Bitcoin QT, the Bitcoin Core wallet, was like the only wallet that people used, which is a terrible experience because it's a full node too. So you had to sync the full node every time. So yeah, people, you didn't want to put $10,000 in it back then, unless you were, I do wish I was like 10 years older, because then I would have had higher disposable income and would have been able to allocate a lot more. But, it's every old Bitcoiner and every Bitcoiner, I think, probably looks back and wishes they would have bought more.
But 0.28 Bitcoin is significant, a great place to start, according to Dan. Austin, the final question, and then
the title of this episode, since we are entering 2021, is going to be something along the lines of Bitcoin price prediction for 2021. Obviously, nobody can see the future. You kind of already touched on where you see the cycle top being, but I just want to make sure we address this question. For 2021, price-wise, where do you see Bitcoin?
2021, we could hit 1 million. We could. Oh. It could maybe hit it. It's a crazy chance. Could hit 1 million. If the whole world starts to believe in Bitcoin, then we could maybe hit that. But yeah, I think this could be a Bitcoin super cycle to 1 million if the whole world starts to recognize Bitcoin's value. But yeah, if it's not that, I think a normal cycle could be between 100,000 and 250,000 or something. So either way, I think we're all going to the moon.
There you have it, ladies and gentlemen. I do want to encourage our audience, if you're interested in following more of what Dan's thoughts on Bitcoin, subscribe to his YouTube channel, follow him on Twitter. Links are in the description. Dan, thank you so much for coming on, man. You're doing great work.
Thanks for having me, guys. It truly is a blast, and to the moon.
To the moon.
Boom.